Hello, crypto world. Welcome to the Chart Historian. My name is Justin, and on this channel, I delve deep into crypto charts, exploring chart structures, fractals, and patterns. Well, in this video, I'm not going to do crypto. It's going to be a bigger picture. It's going to be the macro structure of our economy. I'm going to talk about the Dow Jones, the 10-year yield. Now, I did a video on this subject a few months ago, and in it, I connected the 1929 peak and crash to 2024. In this video, I'm going to do a follow-up on that video. I'm also going to show you that connection once again, and I may throw in a few other charts just to broaden the picture and to give you a better understanding of what could potentially be playing out in the coming months. So let's make this chart come to life. And to do that, I am going to, throw some boxes and some fractals on here. So if we were to take this structure right here, now this is the run-up to the C19 decline. So essentially, it starts in December 2018, and it comes to a peak in February 2020. Now, we'll talk about this decline soon, but I want to focus on the run-up part first. So if we were to copy this run-up to this decline and paste it over here, now we would have to match it for the timing, height, and depth on this part of the chart. It would look something like this once you adjust it. The reason why I have to adjust the timing, the height, and the depth is because whenever a fractal or a structure repeats, the basic idea repeats. However, the timing, the height, and the depth, those will always be original to the new iteration. So what that means is a fractal can, for instance, play out on a larger scale or on a smaller scale. Can also mean that parts of a fractal can be larger or smaller than the original structure, or the timing can play out longer or shorter than the original structure, and same with the depth. The depth can be deeper or shallower than the original structure. So those are variables that will be original, which makes predicting challenging. So once adjusted for the timing, the height, and the depth for this part of the chart, you could see that it has been a good match. Now, if we focus over here, it's a little confusing. Let's zoom in over here and get a better look. Okay, so here we are on a 3-hour candle. I was on a day candle previously. So I have two different possibilities that could be at play. I don't know which one is the right one. We'll have to see how this plays out. Essentially, the blue one is the shorter iteration. So if we are following this blue fractal, we are almost at the peak. So this pullback would give way to a move back up. This would be the peak. It would then, at this point, turn over and go into the declining part of this structure. Now, if it continues at this speed, which take this as a grain of salt because the timing can change. If we were to examine over here, this part of the fractal, today's chart just flew through it very fast. However, over here it slowed down and it took a long time for this part to play out. That same phenomenon can play out over here. So just be aware of that. However, if this is at play, we could potentially see a peak somewhere in June. Again, please take that with a grain of salt. It could be longer, it could be shorter. However, it would be close at hand. Now, there's another possibility, this purple fractal right here. If this one is at play, this peak could take place, again, take this with a grain of salt, somewhere in November. It could be later, it could be earlier. My guess, as of now, it would be somewhere in 2024. However, if this did play out all the way over here, it could easily stretch into 2025. We'll have to see how that plays out. Essentially, if we are doing this purple structure, it would, again, move up just as it would with this blue one. Instead of the decline taking place here, it would we'd have a decline, but it wouldn't be the big decline that comes at the end of this structure. It would do something similar to this. It's going to be original. No structure repeats identically, but the basic idea copies over. So this is just one fractal. There is another fractal, and it is a much larger fractal, and in my humble opinion, it carries much more weight than this fractal. Now, to view that, I'm going to have to zoom out on a very large time frame. Okay, so I'm here at the very beginning of the Dow Jones Industrial Average. I'm also on a month candle, so this is going to be a very large, zoomed out picture of the Dow Jones Industrial Average. What I'd like to focus on is the beginning of the Dow Jones all the way to the peak, which is the 1929 peak. So it's this run up to this peak that we're going to examine. Now, there are roughly 6 structures in this that if we copy and paste them over onto this part of the chart, it would look something like this. Now, this is a little rough around the edges. So essentially, here's the first structure, which is repeated over here. Here's the second structure, which is repeated over here. As you can see, this plays out on a much larger scale than it did over here. So if we took each of these structures and matched them to the timing, the height, and the depth of the chart that comes after this run up to the 1929 peak, that's what we get. Now, I'm going to take this and refine it a bit more. In other words, I'm going to try to match this part right here to the timing, height, and depth a bit better than just this. Bam! So what I did here is I just matched it a little closer to the timing, height, and depth of this chart. There's still parts that I didn't bother doing. I didn't get too much into the weeds. I wanted to make it a cleaner looking chart. As you can see, as this chart has played out, it has followed the basic idea of what it should be doing. In other words, it moves up when it should, it pulls back when it should. Now, the timing, height, and depth of the move up and the pullback is unique to this iteration of the structure, but as you can see, it has been playing out over the decades. Now, this is a very large structure. This has been over 90 years in the making. As you can see, we are very near the peak. We're not there yet, but we are in the final stages, the blow-off top, if you will. What I'd like to do is I'd like to compare the C19 run-up to this one and see how they complement each other. Okay, so I'm zoomed in a little closer. So essentially, where the C19 fractal begins, it just syncs up where it should, and it continues to follow the macro larger fractal that is at play, that has been at play for over 90 years. They're in step with each other. Now, the C19 run-up is much clearer. It represents or reflects the current chart much closer than the larger structure that's at play. How this end part plays out, we'll have to see. But as you can see, it is in step and in sync with each other. Now let's talk about the decline. So this gray fractal is this decline right here. Now, why do I have this stretched out so large? Well, if we were to go back to the 1929 decline, this one over here, this was a very large decline. In fact, we can measure it. So this decline was an 89.51%. I could be off by part of a percent, but it was a substantial decline. Now, if we were to copy this decline and paste it onto today's chart, it would look something like this right here. Now, I have the same percentage decline that it did in 1929. That doesn't mean it's going to play out the same again today. It could be less than this, it could be more than this. What I want to show you is that with this type of structure comes this type of decline. These two declines, they're the same decline. They're identical almost. I mean, look at that. These are separated by almost 100 years apart, yet they are mirror images almost of each other. So even though they're separated by such a large swath of time, time is not a defeater of this structure. You can see that this type of structure where it moves up like this has this type of decline. In fact, there's more to this. If we were to examine the 1987 run-up and decline that took place on the Dow Jones, it would look something like this purple structure. So while I don't have this adjusted to the timing, height, and depth, the basic idea is at play. So starting here, it moves up. That would be this right here. It then goes into this part of the structure right here. It then moves up higher, which it did on both these structures. And then finally, there's the peak and then a sharp decline. This type of structure is a theme that the Dow Jones has. This is a family of similar structures. It's different from this type of structure that we went through in 2008. It's not the same type of decline. This was a gradual decline. These are not gradual declines. These are sharp and deep. Now, I don't know how deep this will go, but if history repeated with a similar percentage, it would look something like this. What I'd like to do next is I'd like to switch gears and examine a relationship that took place between the Dow Jones and the 10-year yield back in 1929. Okay, so this is the 10-year yield. Now, the 10-year yield starts in 1912. It is this part of the chart that I'd like to bring your attention to. Let's zoom in a little closer. Once again, this is a very large picture of the 10-year yield. I'm on a month candle. Now, it's very difficult to see what's going on here. So what I'm going to do is I'm going to copy this so you can get a better picture of what this does. Okay, so here we are, zoomed in a little closer. So I take this beginning structure and I break it into smaller parts. So for instance, from 1912 to 1920, the 10-year yield starts off with essentially going flat, but at a certain point it moves up quite drastically and comes to a peak. That peak takes place in 1920. From 1920 to 1928, the 10-year yield recedes from its peak and moves down to a low. That low takes place in 1928. In 1928 to 1931, we have a new peak that is formed and a decline. In 1931 to 1941, price moves back up and then it goes through this long, protracted decline all the way to 1941. It is my belief that this structure here has been at play since 1941. It's been repeating on a much larger scale. So if we were to take this structure right here from 1912 to 1920 and enlarge it, it would look something like this. As you can see, the structure has continued to follow. This original structure is hard to see. What we can do is make it a little more visible by doing this. So as you can see, it does the same basic thing. It starts off kind of going flat and then it moves up and aggressively towards the end and comes to a peak. So once again, if we were to take what took place from 1920 to 1928, enlarge it to the timing, height, and depth on this part of the chart, lo and behold, we see that this is exactly what the 10-year yield does between 1981 and 2020. So once again, it was a long, protracted decline, albeit a much larger decline than what originally took place from 1920 to 1928. So that brings us into the next structure from 1928 to 1931, which is right here. Let's zoom in on this and get a better look. Here we are zoomed in. So this structure essentially starts in 2020 and it moves up to a peak. Now, in my previous video on this subject, I threw out the possibility that this peak was not the final peak. Here's what I said. Let me focus on this peak real quick. Okay, so here we are zoomed in. Now this is adjusted to be slightly different because I believe that there is a possibility the 10-year yield could potentially move back up. This could potentially be like this. That's the way we just saw it, where this peak right here is this peak right here. There's another way to interpret it, and it's like this. So we have the peak. This, for the most part, goes flat. We see a nice flat bottom here. Then price begins to move up, and then it declines. Now, it is possible that price moves back up and comes to a peak in the same time that the Dow Jones also comes to a peak. Okay, so on the bottom here, I have the 10-year yield, and above here, I have the Dow Jones. So as you can see, this peak that we are currently at took place in 1929, and it came to a high point right here, right at the very peak of the 1929 peak. So we could potentially see history repeating again where it moves up and comes to another peak over here. I don't know how high this would go or how long it would take to form, but eventually it would come to a peak at the same time, potentially, the Dow Jones is also coming to its peak. So as you can see, it is indeed playing out like I suspected. This is going to be the true peak. Now, I'd like to zoom in even closer and get a better look at this. Okay, so here we are on a 3-hour candle. Now, if we were to copy this run up over here and copy and paste it onto this part of the chart, it would look something like this. Now, this is recent history. So recent history can many times be a really good guide to what is taking place on today's chart. However, it doesn't always continue to follow, so it can abruptly stop following. But as we can see, it has followed it pretty well, and if it continues to follow, we should begin to move up, which we already are in that process. Let's zoom in a little more. We can see we've completed this first wave right here. Now, if it continues to follow, it will move up, and it doesn't necessarily mean it's only going to go to this height. It could and likely will go higher than this in the same way that this peak here is lower than this peak. Of course, that's speculation. It could play out different, but as of now, this has been a fairly close match until something changes and clues me in that it's no longer following this. It is my belief that this is likely something that will continue to play out. If we zoom out to a day candle and examine the bigger picture, we can see that if it does continue to play out, it would only be accomplishing the greater fractal at play. So just as this kind of angles down in its peak, this is what this suggests all the way back from 1929. This, people, is the peak of 1929. So it is amazing how the Dow Jones and the 10-year yield are repeating history, not just isolated by themselves. They are repeating history in unity. This is far out, people. I don't see this type of stuff happen very often, and I'm very into structures. So this is a very strange, unique event that both structures are playing out on such a large time frame and both doing the exact same thing that they did at the exact same time in 1929. People, 2024 is 1929 revisited, as I made the point in my previous video. We are still on track. In fact, as this plays out, it just shows that it is indeed playing out very closely. Now, It could do something different than this. We'll have to see how it plays out. But as of now, this is what is likely going to play out. So what will happen? The Dow Jones and the 10-year yield are most likely going to come to a peak at the same time. If we were to assume it would play out on this scale at this speed, what this smaller recent history fractal is suggesting, let's zoom in again. This would potentially peak out somewhere in June. This, people, corresponds to this peak right here, the one we were discussing at the beginning of this video. This also potentially would peak out in June. Now, it could still be doing this, and this structure could take longer to play out. That's a possibility. It also could deviate and do something different, and in the process, give us more time. My point is, as of now, you can make a good argument that we are very near the peak. Now, I'd like to broaden the picture a little more to give you a bigger understanding of what's at play. So on the US dollar index, we have a structure that has been repeating from 1985 to 2002. Since 2002, it has repeated. We are now coming to a peak. Now, this peak could play out on a larger scale. It could move up higher, in other words, than what I'm showing here. I don't know. You can further dive into this structure from this video. This is my most recent video right here. So we have the DXY coming to a peak in the same time frame that we have the Dow and the 10-year yield coming to a peak. Now, this one could take longer to peak. This could go easily into 2025 and beyond. I don't know if it will take that long. After this comes a substantial decline like we see here, or here, if you will. And it could play out a little differently, this peak, than what I have pictured here. This is spot gold, or the XAU chart. Gold has a repetitive macro structure. It is also coming to its peak. I don't know if this is the exact peak. It could move up higher. However, even if it does move up higher, it's still forming this peak. After this peak comes the decline. So we potentially have gold that could potentially decline at the same time the Dow begins its decline. The 10-year yield could also decline at the same time. However, this actually could bottom out before the Dow does. That's what it did, if I'm not mistaken, back in 1929, and then this part begins. This would move back up and have a long, protracted decline, and then eventually move up again. I don't know the timing, height, and depth of this future stuff. We'll have to see how it plays out. It could play out on a smaller, larger time frame than what I have shown here. That's just an illustration of what comes next. I don't have the ability to predict any of those timing, height, and depth things, so please understand that. And then my last chart I want to show you as a little extra is the oil, the WTI crude oil chart. This also has a repetitive structure. I've talked about this chart over here in this video. You can watch it for a deep dive. We potentially are coming to a point, if we zoom in over here, where oil winds its way down to a point and then moves up and re-challenges this peak that it made in 2022. Now, if we look at the fractal, this fractal is actually higher than this, so it could potentially even go higher. Now, how this plays out, the speed and all that, is yet to be seen. As you can see, it has followed pretty close through a lot of this, so I would expect something similar to this. Of course, it's going to be unique, but this move up could potentially begin in 2025. We'll have to see. So my point in all of this is that we have some interesting times coming down the pike. How it all plays out, how the timing plays out, is yet to be seen, but we do have some turbulent days ahead of us. Now, whether this peaks out in the next month or so, or we get a little more time, it peaks out towards the end of the year, or maybe even into the next year, we have this amazing correlation that is taking place between the Dow Jones and The 10-year yield, an event that came to a peak in 1929 and began a massive decline, is potentially going to repeat once again. Everything over the past 80, 90 years has been leading up to this point. I don't know how to emphasize that enough. Now, just because this is coming down the road, that doesn't mean good times can't happen between now and then. Crypto, it is my belief, it is at the cusp of a bull run. Let's clean this chart up. So there you have it, folks. You can see the bigger picture. Now, I don't know how it all ties in, how it all is going to come together, but like I said, we have some turbulent days ahead of us, days that could potentially rattle people. However, to be forewarned is to be forearmed. Just because we have these dramatic movements in the markets doesn't mean you can't prosper. It's important to note that I am not a perma bear or anything like that. I am just relaying to you what I see in the charts. Now, maybe none of this will happen. Maybe we'll just continue to move higher and life will be peachy. However, it's not the way markets work. Markets have booms and busts. It's just the way life is. Life is full of these type of things. We have times where we can do quite well and times where it's a struggle. Just because we have some challenging times ahead or potential challenging times ahead doesn't mean that you can't prosper. There's opportunity in every situation. This is not financial advice. I'm not a financial advisor. If you did enjoy this video, it'd be much appreciated if you hit that thumbs up button. And if you're not a subscriber and you would like to see more of this, I recommend hitting that subscribe button. I'll continue to follow up on these charts as they continue to develop. And for those of you who are interested, I have a Patreon page and a Discord connected to that. It's a $5 a month subscription. We discuss crypto and charts in general. And just remember, even though there's storm clouds on the horizon, there's also opportunity. I'm so glad you caught this video. I hope you catch my next one. Have a great day, and bye for now.